I just want to go back.
Alright guys, so I just want to go into the importance of psychological levels on the currency pairs. I'm going to do GA, USD CAD. The rule more or less applies the same for the currencies. It's quite straightforward, quite simplistic. Gold and oil I'll do separately on the next video. Then we'll get into the moving average, the Astro MA. So what's important here when doing any type of analysis, you guys will remember this from the previous videos, which I've now taken down. I want to just simplify things because this is all about, the spring cleaning process, 2019, simplifying, strengthening, gaining confidence within the markets. So if I start the old rules, which still remain, start on the monthly, weekly, daily, but I'm just going to simplify it going forward to give you the correct levels. And as we get through the content, and as you see my weekly breakdowns and come onto the webinars, you will see that I will update them here and there. Okay, so psychological levels, 0 zeros, and the 50 levels, 50 zones. So what I mean is, number one, what we can do is we can see 8400 is quite close to us. What we can do is we can also go into slow down. Click the level, go to the settings, style coordinates, and what we can do, we can just snap that in at 8400. We want to do maybe 3 or 4 on the chart, if you will. We can also just keep this in mind. I've got to the stage now, whereas when I'm going through the analysis with my crosshair tool, I'm actually just mindful of where these levels are. I'm always keeping my eye on the right hand axis to where prices bounce from and where price can potentially bounce to. Up here 88, okay, if we go to 1.8800, we can see clear cut area of resistance, which is also a round number. So a psychological level, guys, if I just zoom in for you, is a level in which ends in the zeros, so the nice flat figures. We also have the 50 zones as well, like 8450, 8850, 8700, 8750. And as we get into lower time frames, you can see price bouncing off these zones. Now, we want to get to the stage where we are proficient in actually spotting price bounces, whether it's on a daily, 4-hour, and especially the hourly, as we go into the hourly charts and the intraday modes later on. But as you can see right now, price, okay, we came off the 8400 on the daily. We had the 8500 there, which was, as you can see, a resistance for the pair. And then we went to the upside, and look what we bounced from again, 8650. So the 50s and the 00s are known as the psychological levels. What I could expect now, and always expect this, percentage-wise, I would say around 80% the market will rebound from these levels. But as long as you have this knowledge in your arsenal of tools, in your mental gallery, what we can actually do is, again, train your mind on your charts, and that's why we're only sticking to a few currency pairs, because we need to know these pairs at the back of our hand. Always, always, always keeping our charts clean and simple. We want to just use the crosshair to see, okay, you know what, we're slowing down around this level. This level is 8650. And look at how, if I zoom right in, if I put my crosshair at 8650, you can see where we had 1, 2, 3, 4, 5 wicks, and it's kind of spiking through that level. What we can maybe expect now is a pullback on GA. We can pull back and maybe a rebound off the next level, 86, 8650, right there, so on and so forth. Now, again, with this being said, if we continue to train our minds we don't always have to place the key levels on there, because this is where we're going into the advanced realm. The advanced realm is mental. The mental realm mixed with the proficiency of looking at the spikes, the candles, looking at the zones, looking at where we're placing the horizontal rays, looking at the Astro Flip chart, the Astro Flip black chart. I like to personally follow, and I'm always keeping my eye on the numbers. This is why if you just stick to a few currency pairs, and after a while, 3 to 6 months perhaps, or even maybe a few months, depending on how advanced you are and how much chart work you actually put in, you will and mark my words, you will get used to the levels. So here, if you wanted to maybe look for a short trade, short opportunity, here on the hourly, we actually are coming into a nice little wick region going across there from the body up to the wick at the top. We could spike into that, reject that, maybe do one more spike where we could close back below 850. But just know, one confluence is right here. The second confluence is the psychological level in itself. So the numbers, guys, if you just imagine, if you imagine the currency rate as just a number fluctuating up and down, something as you may see on, you know, the currency boards where you can just, or even if you watch Bloomberg and they pull up the euro rate or the GA rate, whatever it may be, and it's fluctuating from figure to figure. If you close your eyes and just imagine we have the currency price bouncing from figure to figure, that's all it is. The chart work involved gives us a visual representation of exactly what I've just spoke about. So the primary essence here is the actual figures in themselves. So if we keep that in mind, we bear that in mind when we are doing our chart work and mixing some of our analytical pieces together, we can actually assist ourselves in our journey of finding trade entries and also take profit levels. So for instance, we rebounded off the 8400 zone, which is the horizontal ray there. We came back above, we started to breathe back above water. We came back up there, we retested, we had the nice little spike, then we had the momentum shift to the upside. You could be looking at the next profit target level, which could be, it could be an intraday zone, IDL, intraday level or intraday zone, which could be the one I've just drawn on there, or it could even be this one, the back end of this shooting star candlestick formation right there as well. So even if you wanted to shift that across, that could be a potential profit target. But again, if a psychological level is layered on top of this, okay, again, it gives you confidence to hold that trade further because you know now the psychological level is a barrier. 00s and the 50s on the currency pairs. Why is the psychological level a barrier? Because if you think about the institutions and the people who are moving the money through the markets, the round numbers are a state of ease. The round numbers are a state of ease for the currency to run into, okay? The currency can run into, collect the orders and then rebound and reverse in the opposite direction. Or we can actually look at this as, so if you see here, we thrusted through, but the body of the next candle came back above. So we went deep below water, the next candle came back above water, 8400. That tells us that something is happening here. Maybe profit taking from this move is happening where we had the spike. Boom, spike pulls back, liquidity is taken, profit is being taken out of the market. Now maybe here, and especially because we have to look at the full picture, whilst also focusing on the fine details, that the market pulls back up. Okay, what's happening here? Look at this, boom, this is a nice move. This is a 250 pip move, more or less, in like 1 or 2 days. I think it was 1 day. What gives the market that velocity is the volume that's collected around the psychological levels. This is why the key levels in the older material was vital for people to actually learn, vital for people to study, and now we can bring it all together going forward to create power. So orders have been taken, orders have been filled, bang, in the opposite direction. So now, whilst we're at 1.8650, the wick is into it, the body has failed to close above. Now we can maybe expect a pullback before potentially going long again, because the bias on GA at the moment with the monthly, look at the monthly, thrust, okay? We thrusted straight through 8400. And what we've also done here, and I'll get to this later on, is that the wick high, the momentum couldn't hold here, the momentum couldn't hold here, no momentum could hold here, here and here as well. But look, 8400, a nice round number. So a lot of profit taking, a lot of spikes are going through these levels. The spikes tell us a clear story from where liquidity lies and the volume is being picked up on either direction, either end. So when we thrust straight through, I'll just go over one thing here. This bullish candle has now taken out the momentum from 1, 2, 3, 4, 5, and it's also closed above 8400. That tells me that this current monthly candle has not ended yet. We can maybe spin to the upside on a higher level perspective. We could go into this next monthly region. And this is something that we can annotate, we can put some text on there, we can screenshot as a potential upside momentum move for GA, and that can give us a clear bias going forward. So it's always good to zoom into the charts, focus, and then keep the charts clean, know exactly what is going on behind the scenes. If wicks have been thrown to the upside, then the next body or candle has taken it straight through and out. That tells us that momentum is picking up. Okay, we've picked up orders from the level of 1.8400, and now we're potentially going to blast through 1.8 and then be attracted into the higher level zones, the higher level regions. If it does get there on the monthly time frame, we can take a step back, we can take a breather, do our journaling process, and then look for shorts in the opposite direction. Or potentially, if it breaks through, we have more wick regions over here which the market could be attracted to, and that is a long-term perspective because that is the monthly. So coming back into the day, as you can see, the daily closure, if you look at the 4 hour, we breached that, but we whipped back above. On a daily perspective, that's why it's good to do your daily analysis around 10:30 p.m. London time, because the average daily range has been reset and we're now ready for the potential next pip count move for the day ahead. Look how here we spiked below, boom, closed above, reversal. Look at this sharp reversal. This is what's happening in the market time and time again. This is where false breakouts occur. So you have to be mindful of where the market is piercing into, where we are about to go to the upside in this case, and then where can the price then continue to lead us into. We can also say, all right, sweet, we have this region across there. It lines up perfectly with 1.8800. Can the market be attracted into that? Maybe we'll pull back, or maybe we'll break above, spike back into it, and then rebound straight to the upside. Psychological levels overall, again, they can give us confidence. It's quite straightforward, guys. It's quite simplistic. If you do your markings, and if range bound market as we are right now on the daily and the 4 hour, if you look at the daily and the 4 hour in combination with each other and just simplify what's actually going on at these psychological levels, where we can actually take the market from there, but just be ready. Let's say you're in a short trade and you're trying to hold this for God knows how long, but you see the market rebound off a psychological level, round numbers, 50s, just know that and be aware, okay, when we see price action such as this, and again, we're going to be covering this throughout, we can actually expect a rebound to the upside in this case, and volatility to occur. I'm sure you guys may experience, you're holding a trade for some time, it looks like it's going to melt, huge red candle, next candle rebounds at the speed of light, and the market reverses completely. So we have to just watch out as to where we're going to. Over here we have spike, again, rocket ship. If we go to 1.8450, right across there, as you can see, orders have been filled into the 1.8450 region where the crosshair is, and then the market has rallied afterwards. We have spikes thrown to the upside here. We have one candle which more or less made halfway to 1 and 2. The next candle completed 1 and 2. So this tells me that momentum now is holding from the mess and the indecision that was going on here, and as you can see, we have a rebound to the upside. This is very, very simple and straightforward if we know how to actually compose ourselves, if we know how to keep our charts clean and concise, and then we can go from there. So that's an example there on the GA. Let's have a look at USD CAD. I'm going to keep the chart zoomed in for now. I'll take that moving average off because that's for the next video. Right, so removing some of the earlier markings, just a few. What can we get and what can we gain from this picture? So, top level, we have 3665, but also if we use the crosshair, we have what? 1.3650. Look how the market has come in. Boom, 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 boom. And then a final stab. We have 1, 2, 3, 4, 5 stabs at 1.3650. The final stab, as you can see, look at the market push right down. The volatility just fucking changes. The volume comes in. So we had a little bit of indecision. We had this little base low over here, which you could just mark on the daily, which was daily support for a while. And then bang, we collapsed. We collapsed out the sky. If we look over here at the base at 3100, if you look at the crosshair all the way across to here, so 3100 psychological level, market comes in, penetrates through that after another leg to the downside, Okay, if you look over here as well, we have some spike formations forming. It was also more or less used as like prior resistance if I was to draw a box rectangle all the way across. But the market then goes boom. We have a nice 1 or 2 candle stab. This could be triggered off fundamentals, by the way. We're going to have a nice talk about fundamentals soon. But the fundamentals often, let's say we have a fundamental event lined up for, let's say, 3 p.m. Early hours of the morning, or let's say this was a 4-hour time frame on hourly, we could maybe see a price spike into a psychological level, tricking people to go the opposite direction. It uses the news to formulate orders, okay, and confuse traders as to what exactly is going on. People start to go short, it picks up the orders, reverses in the opposite direction, consolidates, comes back down, whatever. Over here at 3150, if you look at 3150 as a psychological level, look at the spiky action. The momentum on the spikes is dying because we have boom, a wick back up. We come back into it, leave a wick, a wick trails behind. The orders are picked up here finally, and then the price shoots, and it's like an elastic band, shoots in the opposite direction, gives us a nice movement. Where does it move into? 1.3450. Then what happens? We pull back. We come down here. Look what number we have there. 1.3300. Forced into rebound. Indecision, losing momentum, picks up liquidity. Here we go, 1, 2, 3, and then we hop off because the market has to pick up the orders to get the volume. So this is where it's happening, more or less on the psychological levels. Now what we're looking at on USD CAD is a break at that level and getting scooped back up here. So it's the same rhythm time and time again. That's why we can tell and paint a clear picture when we are proficient on the charts, when our charts are clean, and we can read in between the lines, guys. And this is what we are doing going forward. We're reading in between the lines. If we go over to, where's the other pair? So we have GA, USD CAD. They're my primary focus for now, but what I will do is I will pull up one more quick example on another currency chart. Let's say Aussie dollar. Looking at the Aussie dollar, weekly has been difficult to read. And again, what we can maybe gain from here is the spike to the high, spike to the high, spike to the high, spike to the high. It's losing momentum on the weekly when it keeps trying to come to the upside. If we look at the day, the daily, we have 1 spike, 2 spike. We have 7150 right there. Look to the T. Spike straight through it, 7150 reversal, and then we're going to start to potentially move down. Where did we rebound from before that? 1.700. Maybe just a few pips off, but that's a level in which we need to be careful of. So we can put the ray tool there. We can bring our boom all the way across. And what we can do now is expect, after fulfilling orders at 7150 on the peak of those highs on the daily, we can expect the sell orders to now start to flush into the market and give us that nice confident move to the downside perhaps. Going back in time, what else do we have over here? We have the 7200 right there. So if I just put a line on where 7200 is, we have a spike through. We come back up to revisit this zone. And this is why on the other material, on the old material, you guys may remember we put the regions across on the psychological levels. It's a little bit of a different strategy to place in our zones. Nice thin level across the, whoops, what did I just do? A nice thin level across the psychological levels, which you guys can stick to if you want to. And that gives us the basis and the boundary of, okay, it could maybe spike just to it, right to the level, or just beyond it. And that's the thesis of that material. As you can see over here, spike, straight through those psychological boundaries and levels, and vice versa. Going into the 4-hourly now, what we can also see, this was a huge spike at 0.7150. We thrusted into that zone. Quickly we reversed. Again, capturing many people who want to now go long, but don't have this knowledge. Pulls back down. Spike back into off the back end of that tail, and then the momentum comes through because it's picked up the orders and the velocity around that zone. Bringing the crosshair over to the left-hand side at 7150. as you can see, come in, spike through, then what? Boom, 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 meltdown. So the orders have to be picked up, guys, on the certain levels. The psychological levels are going to help you improve greatly with your trading. And yeah, you want to keep it clean, simple, and precise. And just use this in your tool of arsenal, and your arsenal tool, sorry, it's getting very, very late here. I'm doing videos all day. And what we can then do is you can write in your trading plan what to look for, psychological levels, blah, blah, blah. I'm going to do a proper trading plan throughout the end, near to the end, when I go into the trading journals and stuff. I'll do all of that, and then what I can do is give you guys some advice and tips on what to look for in the market as like a breakdown perhaps. And I can also do it on screen, and I can also make some annotations and label all of that up to a high standard. So that's that for psychological levels. As we get through, I'm going to be completely trying to brainwash everybody with this material and with these pointers, but it's how the market works. If we can stick to that, our trading probabilities from taking profits and also entering the market will increase dramatically, and that's all we want. We want to keep it simple and go from there.
I just want to go